Let's go.
Hello, everyone, and welcome to Zephyr's Adjusted for Risk podcast from the shores of Lake Tahoe. I have another really fun and interesting show lined up for us today. Investing in alternatives, especially private equity, has really grown recently for numerous reasons. However, some recent deals with NFL teams is likely to increase the demand for private equity. Well, I'm very excited for our next guest, who's an industry expert and is here to share her great insights into the world of private equity and professional sports. But first, today's episode is sponsored by the award-winning Zephyr, which helps investment professionals make more informed investment decisions on behalf of their clients. I am honored and excited to welcome the Queen of Alternatives, Shana Sissel. Shana is the CEO of Banrion Capital Management. Shana, thank you so much for coming on the show for a second time. It's an honor to have you on again. Can you please tell us a little bit more about yourself and Banrion Capital Management?
Sure. I have been in the industry for the last 25 years. I started my career as a financial advisor, and over the years, I have had many hats. Um, but the focus of my career has really been for the last 15 years on alternative investments as both an institutional allocator and as someone who assisted RIAs in building out alternative platforms. And it was through those experiences that led me to launch Banrion Capital Management in September of 2022 as a way to build a technology solution that was centered around advisors to help them allocate in a scalable way for all of their clients allocations to alternatives. And with that, I stopped wearing hats and started wearing a crown because Banrion actually means queen in Gaelic,
Okay.
which seems appropriate considering St. Patrick's Day. But it means queen in Gaelic. And when Cynthia Murphy, who is formerly with Title Funds, now with Vetafi,
Mhm.
heard that story, she called me the Queen of Alts. And that is how I earned a crown instead of a hat.
I love it. I love it. And I was going to ask you where the name came from. And I love that, a tie in there, the St. Patrick's Day and the green and stuff like that. So I love that there's that backstory behind your name or
Yeah.
behind that firm's name.
Yeah, my mom's originally from Ireland, so I'm a first
Okay.
generation American. I actually am an Irish citizen as well. I have dual citizenship. So when I was trying to come up with a name for the firm, I threw the word queen into a translator,
Oh.
and Banrion came up, and it's Gaelic, and it made sense. And the reason I was searching for the translations of queen is because anybody who knows my backstory is when I was a teenager and in college, I used to compete in pageants, and so that's kind of a tongue-in-cheek way of kind of a nod to my early years competing in pageants, which actually helped me a lot of ways in communication and things of that nature for the media and interviews like this that I do all the time.
But also, I love it that then it has your connection to your heritage, your
Mhm.
Irish heritage. So it's really full circle. So
Yes.
great, great. I love it. Um, so and I'm a big fan of St. Patrick's Day. So green beer. I just got a my uh corned beef ready to go. So I am a big fan of St. Patrick's Day.
Well,
You
I
know,
will be down in Miami for Future Proof on St. Patrick's Day, and we have a dinner that we're doing to celebrate. So I will be celebrating myself, but I will not be making my own corned beef and cabbage.
Awesome. Well, have fun in celebrating in Miami with Future Proof. Um, so the NFL is arguably the most popular professional sports league in the country. Private equity firms are now starting to get in on the fun and buying stakes. For example, private equity firms bought stakes in Buffalo Bills, the Miami Dolphins, to really try and capture some of the upside growth in the NFL. What does that mean for the NFL and private equity?
So sports has been an area of investment for private equity for quite some time.
Okay.
The NFL has actually only been the late one to the party. The NBA, the NHL, the MLB, all of those sports had allowed for investment by private equity over the years already. And there's currently a number of firms that have long-standing histories of investing in sports. One of the most well-known is one called Arctos, and
Mhm.
they are the ones that made the investment in the Buffalo Bills. I would also argue that private equity is not new to the space, as most of the team owners have some sort of connection to private equity and hedge funds. The current owner of the Commanders, who just bought the team, is got
Mhm.
private equity background. If you look at the Carolina
Yeah.
Panthers, they're owned by the founder and CEO of Appaloosa, which is a hedge fund.
Mhm.
Melody Hobson is part of the ownership group of the Denver Broncos of Ariel Investments. So not new. If you look at other sports, that's true as well. If you look at the Boston Celtics, which is my hometown team, I'm a huge fan. Um, that team is owned by a bunch of folks that are associated with Bain. So private equity is very familiar with sports. They
Mhm.
individually own a lot of the sports teams, and so it seemed to make sense to allow them to invest in the teams themselves on the fund version to have LPs. But there's definitely restrictions to it. The NFL in July of last year, I believe, approved that private equity could own up to 10% of a team,
Mhm.
but that is the max, so it would never be a majority. And it only approved 10 firms to make those investments. So it very much limited who can invest and how much they can invest, but it has opened the door. It was a big news story, and now it's even moving into the NCAA with name, image, and likeness. The Big Ten is currently considering taking on private equity investments. So sports is a big thing. But the the highest level sports, the ones that are the sexiest, are actually the least attractive investments. They attract people to want to invest in these funds. That's why they do it. But ultimately, the best investments tend to be the emerging sports like women's sports, things like
Mhm.
yachting and cricket, and things that maybe don't get people as excited as investments because you can't go tell your buddies at the golf course that you own a piece of, the Boston Celtics. But the majority of the outsized returns are coming from the emerging sports arena. And more of these products are becoming available to the average retail investor um,
Mhm.
with firms like CAS Investments, which has a feeder fund into the Arctos Fund. AAM is helping and has a feeder into the Avenue Capital Fund, which is a fund that is managed by Mark Lazary, the former owner of the Milwaukee Bucks. And there's other firms like Champion Ventures coming up that are building out funds as well. I've recently become aware of, and I will keep it nameless, a firm that is launching an interval fund in the space.
Okay.
It's in the quiet period, so I can't say much more than that, but that will even make this area more accessible to the mass affluent investor and folks that are definitely interested in this space.
Great insight. And I love that you brought up too, like, yes, it's making headlines right now that PE firms are buying stakes in the NFL, but you made a great point where it's not new. Um, like there's a lot of connections, like you said, to hedge funds, PE, and other financial firms. Why do you think it's making such big headlines? And maybe why is the NFL a little bit slow in allowing private equity to take direct stakes into their teams?
So the NFL is very, very protective of the ownership of teams. They have like a very robust background check, and approval process for anyone who's buying a team. That's true in all leagues, but the NFL is particularly tough because it's got the least amount of teams and the
Mhm.
least amount of games, and the ownership has the most influence there. It's interesting because as an investment, you really need to have a single person who like the buck stops here. It can't, even in ownership groups, there's always one person that's kind of the majority owner. And that's on purpose. I had the opportunity to have lunch with Mark Lazary over the summer. And he talked a lot about the time he owned the Bucks, and he actually owned them when they won the NBA championship. And
Yep.
he talked a lot about in order for sports teams to have value, right? It's not like a traditional investment. Traditional investment, you want to make sure that you're profitable, you want to be growing your profits. That's where the value in your company comes
Hmm.
from. That's how you reward your shareholders. It's not the case in sports. In sports, the vast majority of the management of the team requires you to spend every dollar that you possibly can. And the more dollars you can generate through licensing programs,
Hmm.
through the sale of merchandise, through ancillary things like the New England Patriots have Patriots Place, which is basically an outdoor mall. Where they can generate income, the more you can spend on your team and your team experience to allow you to attract free agents. A lot of people are aware the NFL Players Association does a survey every year where they rank and grade teams based on a number of different factors about whether or not they're attractive to free agents. And these things matter because the only way your team increases in value is through winning.
Hmm.
If you win more, you sell more merchandise, you sell more tickets, the licensing fees goes up, you get more TV deals, and you get the national broadcast and not the
Yep.
regional broadcast. All of those things matter. Well, there is some sharing of revenue across the leagues as it relates to the television
Hmm.
contracts and deals. Ultimately, you need to be able to spend as much money as possible to do the things to make your team better, and that's how your team increases in value. If you look at just the Commanders, they came in, got a new owner. The new owner immediately made changes, and you saw an immediate improvement
Yep.
in the team, which makes the team worth more. And so all of these things really matter, and it's a different way to invest. It makes it harder. Banks don't loan to sports teams because it's not about profitability and cash flow. There's a lot of unions and a lot of joint
Yeah.
deals that happen. But at the end of the day, what's going on right now is the value of these teams is growing to such an extent, it makes it much harder for a single individual or even a small
Yeah.
ownership group to buy the teams. So they need to find other ways to be able to support these multiples and these growing multiples. And so that's why they've had to have the ability for private equity
Hmm.
and these LPs to be able to invest to support the growing multiples so that you can have a single individual still be able to afford a majority ownership stake in the team without having to have 20 different minority owners and the ownership group, which can be difficult to put those things together. And because the NFL, again, is the most valuable league, has the most valuable sports contracts for the media rights and
Hmm.
things of that nature, um, you know, they didn't need this until recently. And so they were the last to move. But
Okay.
again, ownership matters. We've seen over the years problems with owners that, were bad for publicity for the
Yeah.
leagues in general. And the Commanders is a great example of that. But we had the Clippers years ago. These things you can force an owner out, and that they're very particular about who the figurehead owner is going to be for any given franchise at any
Mhm.
time.
Yeah, fantastic insight. So what you're telling me, Shayna, is that if I'm an investor and I'm looking for companies or investments with free cash flow, not to look into the NFL teams, is what you're saying.
And not to look into sports in general.
Okay,
It's
yeah,
not
yeah.
just NFL, it's all
Yeah.
sports. But it's a completely different business model.
Yeah.
And one of the ways that sports is so attractive, especially those emerging sports right now, is the growing demand of streaming services for the rights to broadcast live events. If you think about streaming services, right? Um, you can order, you're only going to go and pay to be a member or to have access to the
Mhm.
streaming services if there's programming that you want to see. And for advertising purposes, which is the vast majority of the way that they can generate um, revenue, if you think about Netflix, it has an ad supported
Yeah.
tier, they all do now. You need to have live sports because if you can fast forward through the commercials, then that's no value to the advertiser. You
Yeah.
got to have something live. And so now you have increased competition for the rights to broadcast live sports. And that is actually why the emerging sports have become so interesting. Because if you think Netflix in particular, Netflix has the media rights to a number of emerging sports. But let's talk about like golf or
Mhm.
Formula One. they've been able to create content above and beyond just traditionally broadcasting live sports. They can create content that follows the individuals, and it's actually been able to bring new viewers into the sport and create new enthusiasts, which is why those areas of sports are the most attractive because they are the least expensive to invest in and they have the most amount of upside. Yachting is another one. That's a sport that you could buy an entire team for $1 million and now it's worth 20 and it's only a year
Hmm.
or two later. So you're looking at these massive increases and value, which you're not necessarily going to see in the more established leagues. But
Yeah.
because of the streaming services, because of the demand for media rights, um, the cost of those media rights and subsequently the value and the ability to rev share across these leagues is increasing as well. So they're very profitable in that respect.
Yeah. It's interesting you bring up those emerging sports. I don't really think about, I'll watch F1 here and there, but and valuations, it's a very good point. Like it's probably a lot cheaper to invest in, like you said, a yachting team versus the NFL. And do you think that will help promote, these emerging sports and sports, it's never going to go away.
Mhm.
There's people that don't like sports, but sports is going to be around forever. It's going to be very popular. So I
It's
can
also something you can only see live, right?
yeah.
Because if you watch it on a delay, like you already kind of know what happened. It kind of takes all of the anticipation out of it, all the excitement out of it. I know some people do it, but it's really hard this day and age to, not find out what happened in the game. And so live sports is really the one and only place where you really have to watch it live for it to be of any value. So that has a lot to do with it. And then to your point about emerging sports, the number one most attractive place for emerging sports is women's sports, and that's the Caitlin Clark effect.
Hmm.
You're seeing more and more. Boston's going to be getting a WNBA team. Why do you think that is? Because of increased interest, because of Caitlin Clark. As
Yeah.
we have these transformative figures come into the leagues, these charismatic figures that improve viewership, then you can increase the amount you charge for the media rights, for the licensing, for the merchandise. All of these things matter and can create really attractive storylines. Caitlin Clark, again, is a great example of that. Her storyline, per se, has been very compelling, and people are paying attention, even if they never cared about women's sports before. They care now, and that again makes it more valuable. And now all of a sudden, you're seeing interest in WNBA exploding, increasing the number of teams and traditional NBA cities and regions, and
Mhm.
so all of these things I think are good. And again, there's lots of people who want to watch sports, and there's lots of outlets of which now to be able to find them.
Yeah, yeah, I'm glad you brought up Caitlin Clark. I have some friends that are big Iowa fans. I believe you're an Iowa
I'm a
fan.
huge Iowa fan, yes.
And they went down to, I believe, Vegas when Caitlin Clark went and played there last year. Tickets were outrageous. They were like $300 and
The,
the cheapest. And that's the Caitlin Clark effect. So hopefully she can really help promote. And it's not just her. There's a lot of younger players coming into the league that are really helping the WNBA.
Yeah, and the interesting thing about that is last year for the Final Four, the women's Final Four had greater viewership than the men's Final Four, and the Final Four tickets for the women's Final Four were significantly more expensive than the men's Final
Mhm.
Four. In fact, they were selling out tickets at thousands of dollars just for the warm-ups and the practices for
Yeah.
Iowa and LSU and some in South Carolina and those teams. And as you said, I'm an Iowa fan. Through my ex-husband. He went to Iowa, and so I've spent a lot of time in Iowa City. And it's hard not to become a fan if you've spent a lot of time in
Yeah.
Iowa City and you've watched a football game at Kinnick, and then you realize that like the significant amount of players in the NFL that nobody realizes went to Iowa, like George Kittle,
Yeah.
I'm trying to think.
There's a
There's
bunch of linebackers.
Cooper DeJean.
Oh
Cooper
yeah.
DeJean, the hero of the Super Bowl, is from
Yeah.
Iowa. Um, Tons of Iowa Hawkeyes in the league that are making an impact, and so people are paying attention for sure.
Yeah. So as a Wisconsin Badger fan, let's change the subject and get
Sorry
off
about
of
that.
the Iowa Hawkeyes for a little bit. So I love the Big Ten, and it's interesting you brought that up at the beginning, with NIL and all this money being just thrown about college football, college sports is just a huge money-making venture. It's not surprising private equity is dipping their toes in there also.
It's changed the way the game is played. In fact, when there was the original rumors that Bill Belichick was going to become the coach of UNC, I immediately was like, "There's no way that would happen. Bill Belichick is not made for the college game. I cannot imagine that ever happening." And then it happened. And as more and more came out about why he decided to do it, it ultimately came down to the fact that NIL has made college sports like free agency, which is something he
Yeah.
felt he could actually compete in, right? Because now, in addition to going out and doing recruiting, he can recruit players from other schools, and having him come in could be an attractive thing for a player that might be somewhere else that has talent but wants to be more NFL ready. And
Mhm.
so after like kind of learning that and his connections to UNC from his
Yep.
dad, it made more sense. But I was the first one to think that that's insane. But I do think it's going to be easier for coaches like Belichick who understand how free agency works and that aspect, and creating a program that will attract free agents in the college
Yep.
game in the same way that you have to worry about it in the NFL, is going to be an asset for UNC. And that's why you see private equity looking at the Big Ten and others, because name, image, and likeness matter.
Yeah.
And if UNC is not necessarily a perennial NCAA
Mhm.
football top
Yeah.
10 ranked
Mhm.
team ever. Um, all it takes is somebody like Bill Belichick to come into the mix, and all of a sudden they can suddenly compete on the level with Big Ten teams and SEC teams, because that's an ACC
Yeah.
team. And subsequently, you got to be able to continue to have your programs be attractive. I live down the street from Northwestern, and they're building finally
Oh,
a new stadium because
and
Ryan
it's awesome.
Ryan
I've
Field
seen
was
pictures.
awful. I drive by it every day because I have to drive to Evanston because my son's karate dojo. He occasionally takes
Okay.
classes there, and my trainer's there. I literally drive by the construction at Ryan Field every day. And then if you see the temporary stadium they have on Lake Michigan,
Yeah.
it's beautiful, and it's kind of sad that that's not going to be the stadium. It's kind of
Yeah.
better in many ways. But again, it's a focus on making sure that these the facilities are excellent to be able to compete. And NIL requires that you have more money in the coffers, and
Yeah.
subsequently, private equity becomes more valuable to conferences so that they can continue to be at the top of the mountain. And the Big Ten, the SEC are the big dogs, so they want to stay there.
And it's all about money, right? Competing as much as you may not like, especially in college sports, it's all about money. You need money to compete, and that's really where private equity comes into play. How does all this impact the retail investor? How is it all, trickled down? What's in play for the retail investor now that they can maybe get exposure to more professional sports?
Well,
What's in store?
as I mentioned, there's more and more ways for the retail investor to gain access to this space. These are not going to be evergreen funds, just the nature of,
Yeah.
because they are a subset of traditional private equity. And as I mentioned, you have CAS with the Arctos
Yeah.
relationship, and then you have AAM with the Avenue Capital relationship. And then there's others out there. I know Blackstone's trying to do a sports rights
Mhm.
fund, and there's very focused funds that have feeders that are coming out. And as I mentioned, I recently got wind that there's going to be an interval fund coming out in this
Very
space,
excited.
which is pretty exciting because that even broadens the opportunity set. But these are fairly illiquid assets. And I like to tell advisors that this is a great starting point. If you've never had exposure to alternatives, if you are concerned or your clients are concerned about liquidity and not being able to get access to their funds, in a way, this is a really easy
Hmm.
conversation to have for an entry point to start having that conversation, because sports is a passion for a lot of people. I'm one of those people. My undergraduate degree is in sport management, which is why
Awesome.
I have so much knowledge into the leagues and the sports and how they operate. That's what I did in my undergrad at UMass Amherst, which is one of the top sport management programs in the
Hmm.
world. And so subsequently, you got to look at different ways to get in, but they will be a liquid. But it's a very easy conversation to have. You know, you're talking to your client about what happened in the game last night. Oh, by the way, did you know you can invest in sports? And let me tell you a little bit about this fund. I think it's a great way to start to facilitate a conversation that will get your clients excited about something that, you know, you may have been hesitant to talk to your clients about before because of illiquidity and complexity and making these investments. That's going away, and the access is there for those who are able to meet the minimums, which can be anywhere between 50 and 100,000.
Yeah.
So, you know, just and obviously it'll be less than that for an interval fund, but still, it's going to have at the moment an accredited investor hurdle to get into some of these feeders like the CAS one and the AAM one. But it's growing, and I think that that's just a really interesting opportunity for advisors to have, you know, really good conversations with their clients about something that they're already really passionate about to begin with.
Yeah, that's a great point. And over the years, I've done a lot of research in Zephyr about the impact different alternatives have on investment portfolios and the role they play. And, now at this point, that's out there. Most people know the impact that, it increases diversification, moves the efficient frontier to the northwest. That's pretty clear. But it's that conversation that you brought up about for a financial advisor to a client, trying to articulate what alternatives is private equity, and it can be very difficult and arguably the most important conversation, and liquidity. But investing in maybe your favorite sports team or a sports team probably removes some of those concerns about liquidity because they want to invest in them long term or be a holder in it long term, and they're willing to.
Well, you and I talked about this in our prep call about the Green Bay Packers. You were
Yeah.
saying, you know, people who own shares in the Green Bay Packers, and they could care less what the shares do. They just want to own shares in the Green Bay Packers. I think there's a lot of that out there. I think people just want to be able to say that they own a piece of their favorite sports team. I know that I would be psyched to say that about the Celtics or the Patriots or
Yeah.
the Bruins or the Red Sox, even the Cubs. I'm a Cubs fan. That's the only team I adopted when I moved to Chicago. Um, it was also kind of a bandwagon jump because I moved here in 2016.
Oh, there you go.
And
Yeah.
it was the year they won, and it was
Yeah.
Theo. It was like Red Sox 2.0. But my point being is that it's an easy conversation to have. And also, from an illiquidity standpoint, the concern isn't as much there because of the personal nature, because of the personal passionate connection to these type of investments. Clients will hold on to that investment. It will be the last thing they would want to sell under any circumstances, if they needed liquidity, because there's more to that holding than just
Yeah.
in, you know, a certain line item in their portfolio. It's a personal connection. It's something that they can put on their bio on Instagram. I've seen that before. I've literally seen people who own tiny, tiny stakes in sports teams put like owner in the Yankees. It's borderline ridiculous, but they do it. And it's an ego-driven
Yeah.
thing. And to suggest that people don't like to have their ego stroked would be
Yeah.
that would be untrue to suggest that they don't. We all do. We all like to, you know, be able to kind of brag a little bit about ourselves or things that we're doing. And this is an area where people will definitely connect on that level. And the concerns about liquidity and freaking out about I can't sell out of it kind of go away.
Yeah, very good point. And it is that you go, I have friends in Wisconsin that own shares of the Packers, and it's a ego thing. They don't get anything. They might get some insider, or maybe some perks at a game, but there's really not much financial benefit, but they're going to hold it forever. They're not getting rid of it. And the same I can think with investing in pre-E or PE or one of those funds that are now available to retail investors. They're going to hold it for the long term, and that's good too because we all know investing is very emotional and
Hmm.
behavioral driven. So if you can get investors to see the long term, they're better off.
Yeah, absolutely.
So. Shayna, thank you so much. It was really such a fun conversation. We love talking about sports and being able to connect it to investing. It's a win for everyone. Um, what where can our audience get more information about Banrion Capital Management?
Well, you can go to our website, although our website needs to be torn down and rebuilt. We're in the process of doing that. BonRainCapital.com. You can find us on Instagram, LinkedIn, and X, Banrion Capital. And then you can find me on all the same channels. I'm finance_queen 2020 on Instagram. Shana S621. I wish I had a better handle there, but it's been my handle for like 12 years and I can't really change it at this
Yeah.
point on X. And then, of course, you can just find Shana Sissel on LinkedIn. Feel free to connect with me. As I said, sports is an area that I'm pretty passionate about. I grew up in a sports fanatical household. In fact, I've had some very, very heated uh, trash talk with my brother over the years between he's a huge Notre Dame fan,
Oh,
almost obsessively so to the point where like sometimes it's too much and it's like, dude, it's not that serious. And he doesn't like that I'm a Hawkeye fan because I used to be a Irish fan because that's my family, but like then I got to go to Kinnick a bunch and kind of shifted my allegiance. And you know, when you think about those things, I love talking about this. I love that I am the go-to for all publications when it comes to sports rights. I just did an interview for Pension and Investment about this.
okay.
So it's something I love. You can connect with me on all of that. If you want to talk sports, feel free. I love it. So that's where you can find me. And that's definitely the best way to reach out is if you start with sports, there's 100% chance I will respond.
Fantastic. So if I ever need to get in touch, I'll just put the subject line Iowa Hawkeyes and
Yes.
get the
Or
immediate response. Uh,
Boston Celtics, New England Patriots,
there we
any of
go.
the above.
Well, your passion for sports and investment really shine. You can really tell in the conversation, and it's a great interconnection because, like you've said throughout, you got to have money to compete in sports. So now it's really coming down to the investment world, which is really fun for, everyone, especially those in the sports world.
Yes, absolutely.
Shayna, thank you. Again, such a fun conversation. Enjoy your St. Patrick's Day down in Miami at Future Proof. And thank you, everyone, for listening to this episode of Zephyr's Adjusted for Risk podcast. You can watch all of our other episodes on the Zephyr YouTube channel. And lastly, give us a follow on the Zephyr LinkedIn page to learn more about the research. And you can also see other episodes of the Adjusted for Risk podcast. Thank you and have a great rest of your week.